baby, sit back, buckle up, and get ready for the most intense earnings season of my entire investing career. Every mega cap giant under the stock market sun has basically lowered guidance for this quarter or is shrouded away from even offering guidance at the likes of Apple. So I've taken the executive decision today to sideline all of my tech investments just for this week because it will dictate whether the markets are coming or going. And just for your entertainment, so we can share our anxieties together, guys, we're going to be getting together every day for the next 3 days to conclude at the close of market exactly what these earnings look like. I did this with Facebook last quarter. It was my largest investment at the time, and I got slaughtered, and you guys got to watch that in real time. So if that's something you want to see, consider hitting that subscribe button. This is not investment advice. Most people should be cost averaging into the market, but we're going to discuss my reasoning behind exactly what I'm doing here. But first and foremost, I want to talk about companies that already posted earnings, what it says for the rest of the market moving forward. We'll talk about a little bit of drama with Elon Musk, Twitter, Bill Gates, and then we're going to take a look at these specific earnings dates that you can join me on to talk about the companies I'm most interested in. So hit that like button, folks, because first and foremost, the Coca-Cola, a Buffett favorite here that has been crushing it lately, and they recently just posted a blowout quarter. They did phenomenal numbers, and I kept mentioning that consumer staples are going to be the place most investors are going to be hiding out. These really safe investments where they have pricing power. What do I mean by that? Well, if you need toilet paper, toothpaste, or Coke, which Coke is probably more consumer discretionary, you're going to need it. You're going to go and get it. You're going to pay whatever price it is. You're going to live your daily life, right? So they can increase the prices and deal with the margin crunching, the geopolitical events, and even Coca-Cola on that earnings call mentioned one thing. They said, hey, we see some storm clouds on the horizon, so we need to approach this stuff cautiously. Nothing's perfect here, right? Now, before I talk about the earnings, this company, just because they crushed it, guys, the stock rallied aggressively, but in this current market environment, it don't matter if you have a blowout quarter. It doesn't matter. Elon Musk, Tesla, they blew it out of the water. The stock couldn't rally at all. Same thing we're seeing with Coca-Cola. It rallied off those earnings and then gave it all back in this same freaking day. So this is why I'm saying that it doesn't even matter if you think tech stocks are going to rally with good earnings. They're probably not. And if they're bad earnings, it's going to be real bad on that stock price if Netflix has anything to say about it. Now, taking a look, guys, they beat the revenue for Coca-Cola by 16%. And even CNBC takes on my fear of this insanity by trying to show me gold advertisements, which was really funny, by the way. But nonetheless, guys, their earnings came in at 64 cents adjusted versus 58 cents expected, with 10.5 billion in revenue versus 9.83 billion. What does this say? This means just like Procter & Gamble earnings, all the consumer staples are probably going to be doing just fine here, folks. But again, because they've been so bought up and the market is so exhausted at this point, they're not going to rally even with these good earnings. It's just a place to park capital, collect dividends, and know you might be okay. Now let's talk about Twitter real briefly, because Twitter reminds me so much of the deal with Activision Blizzard and Microsoft. Now, Elon, apparently over the weekend, they talked with Twitter and they're working out a deal, and it's likely that Elon's going to get Twitter for the billions of dollars he's willing to pay. And the cool thing is Twitter stock is rallying. Now, this is a really interesting investment setup. It's a really interesting speculation because obviously Twitter, Activision Blizzard are very solidified companies. I mean, they all have their issues, but it's not like the stock is just going to drop 50% for whatever given reason unless they post really bad earnings. So from an investment standpoint, if you really believe Elon's going to buy Twitter or Microsoft is going to get Activision, you can buy it at the suppressed prices that aren't nearly as close to the buyout price. And if you think it's going to happen, you'll get a guaranteed return with minimal downside risk. But I am not playing that speculation, but some of you I know probably are. Now let's talk about the real drama here, because I think Elon Musk is using Android, which blows my mind because who the heck isn't using an iPhone these days? Just by the green text. I always get annoyed when I see green text, but he was texting Bill Gates. Bill Gates messaged him saying, just landed. Elon said, cool. He says, do you still have $500 million short against Tesla? Which kind of blew my mind. I'm like, wow, this guy's ballsy, right? And then obviously with a monocle and a cane in hand, Bill Gates responds saying, sorry to say, but I haven't closed it out. I would like to discuss the philanthropy possibilities, however. And Elon replied by saying, sorry, but I cannot take your philanthropy on climate change seriously when you have a massive short position against Tesla, the company doing the most to solve climate change. I always feel like these rich people sitting in their ivory towers bickering. Elon doesn't care who you are or what your stature is. He will call you out for it. And I couldn't get over that. And I think somebody leaked these and I thought they were fake, but turns out they were real, as Elon Musk replied to it, said, from making fun of Bill Gates for shorting Tesla while claiming to support climate change action. And this is just funny, stupid banter. So I just wanted to throw that in there as a funny little hit piece for whatever reason. But let's talk about the real things that matter here. And now, after catching Coca-Cola's earnings, I'm expecting Pepsi to be okay. They have large exposure to Russia to some extent. So it'll be neat to see how all that pans out with their pricing power. But Pepsi's April 26th, so tomorrow in the morning, this will be one that I'm paying attention to that I'm not sidelining my capital on. You'll notice that I'm leaving most of my investments within the consumer stapled area right now, just because, again, the market doesn't seem to care how good earnings are, and I know these earnings are probably going to be relatively okay. And even if they're not that okay, you know, Verizon missed earnings, the stock came down, but nothing as aggressive as tech could potentially be. So that's going to lead us into Microsoft at close tomorrow. Now we're going to get together, guys, and we're going to go over these in real time. We're going to talk about them live. So join me, because Microsoft was and it will likely continue to be one of my largest investments. I'll probably buy it back. I don't know what I'm doing with the market right now. I just want to see what the general sentiment is after they post. So that's going to be coming tomorrow night. So join me live for that. We also have Google coming up as well. Now, when we're talking about the advertising giants here, guys, and don't get me wrong, we're going to get to know how these advertising giants are basically going to do based off something like UPS earnings that also come out tomorrow. There's going to be a lot of earnings in between here that'll dictate how these other large caps are doing, because if UPS sees a slowdown in shipments, obviously Google marketing is probably selling a lot of material goods, same with Amazon. So if UPS shows lower, you know, guidance and things start slowing down, we're probably going to get hit on Google here. And obviously if Google gets hit any harder than Facebook did, they both could end up in the same market cap capabilities. Like they both could just plummet for whatever reason. So Google's going to be really pivotal to pay attention to, because marketing and advertising is what runs small town America, and we all use Google's income stuff. So I mean, I'm using Google to many extents, but nonetheless, so we're going to be watching Pepsi, we're going to be watching Microsoft, we're going to be watching Google tomorrow. So join me for that. Now, Facebook is coming out on the 27th. This one, guys, even if it posts good earnings, and it needs to post real good numbers, the stock will, I imagine, rally. It's so cheap already. But as I mentioned, same thing with Alibaba. It doesn't matter how far the stock's down, it can always go lower. And they lowered their guidance to, on the low end, about 8% revenue growth. If they miss that, ooh, baby, we're going to see a real Netflix situation on this side of the spectrum here. So leading into Apple, this is going to be a big one, guys. The two that I want you to pay most attention to is Apple and Amazon. These two will literally dictate whether we're going to be coming or going in this next quarter. And this is just, like I said, my anxieties are running through the roof here. And even if they post good numbers, they're not going to jump 10 or 20%. It's not going to happen here. What could likely happen is they post okay numbers, the stock flatlines or continues to go lower, or they post unfavorable numbers and slow down guidance, and then all of a sudden, oh boy, because this one didn't offer guidance at the beginning of the year, and if they miss by any metric on what the market is expecting here at $1.43 per EPS and $94 billion in expected revenues, the market's done. We're toast. We're going into a real downtrending market here, guys. And Amazon obviously representing pretty much the global consumer packaged goods industry. This will really also give us an indicator whether we're going to be heading into a recession or not. Now, like I said, guys, this is just how I feel. Like I said, don't do what I'm doing. I honestly think most people should be cost averaging into these stocks over the very long term, but this is just something that I've decided to do this quarter, something I've never done. So if you want to get some entertainment value out of it, we can get our anxieties out together in these live streams. Catch me tomorrow at 4, Wednesday at 4, Thursday at 4. We will literally be talking about everything that is going to matter, and then we'll watch the after hours of each stock and see whether they come or go with the market. If that's something you can appreciate, in my clarity to the transparency of everything I do, consider subscribing, hit that like button, and as always, stay cool, stay awesome, and I'll catch you in the next one.